All right, let's jump right in, because there's a really strange puzzle playing out in the markets right now. On one hand, you have precious metals like gold absolutely soaring, but on the other hand, you have crypto's biggest player, Bitcoin, and it seems to be just stuck in the mud. So what's really going on here?
I mean, just take a look at this. Gold is smashing through to brand new all-time highs. Silver's showing some incredible strength too. But Bitcoin, the asset that so many people call digital gold, it's just quiet. For the last several days, it's been totally trapped in this super tight range, barely moving an inch.
And that brings us to the big question for this explainer. Why? Why is Bitcoin's price so flat when other major assets are taking off? Well, the answer, according to our source, is kind of hiding in plain sight in the options market, and it points to a potentially explosive week ahead.
This right here, this is our main clue. $23.6 billion. It's a massive, massive figure, and it's really the key to understanding the pressure cooker that is the Bitcoin market this week.
So what does this number even mean? Well, it's the total value of Bitcoin options contracts that are all set to expire this Friday. Now, this isn't just a big expiry. We might be looking at one of the largest volumes in history. And whenever you have that much money on the line, it creates these incredibly powerful incentives that can directly influence the price. So you might be wondering, how can an event like this actually steer the price action that we're all seeing? Well, to get that, we need to talk about a pretty fascinating and maybe a little grimly named market theory.
Okay, so let's unpack this idea of max pain. It definitely sounds dramatic, and for a lot of traders, it really is. It's a theory that helps us predict where an asset's price might get pulled towards as a major options expiry gets closer and closer.
So here's the crucial part. The max pain price is that single price point where the absolute greatest number of options contracts become totally worthless. Now, this is just terrible for the people who bought the options. We're talking usually retail traders, but it is a jackpot for the big institutions who sold them. These sellers, they're known as market makers, and they're basically the house in this casino. They profit the most when all the buyers lose. And this is where it gets really interesting right now. As you can see, Bitcoin is just kind of hovering around $88,000. But the max pain price for this Friday's monster expiry is all the way up at $96,000. That is a significant gap, and it creates a very powerful incentive for a very specific group of people.
Yeah, so try to put yourself in the market maker's shoes for a second. They stand to make the absolute most money if Bitcoin's price finishes the week as close to $96,000 as possible. With the price so far below that level, they have a multi-billion-dollar reason to push the price up. And all that choppy sideways action we've been seeing, that's likely them just hedging and getting all their ducks in a row for a big move later in the week.
So, how could this all build into a potential scenario for the rest of the week? Well, if you follow this theory, the quiet price action we're seeing right now isn't a sign of a boring market at all. It could actually be the calm before the storm.
Here's a possible playbook. For the first part of the week, market makers keep the price locked in a tight range, while they get all their positions sorted out. But then, as we get closer to that Friday expiry, maybe Wednesday or Thursday, they could kick off a sharp pump, driving the price up, all in an attempt to hit their most profitable target, that $96,000 max pain level.
Now, it is absolutely critical to remember this disclaimer, and this comes directly from the source material we're looking at. This whole scenario is built on the idea that the options market is the main thing driving the bus this week. If some other huge news event happens, like a big regulatory announcement or a macro shock, it could throw this whole theory out the window. This is a theory, remember, not a guarantee.
And speaking of other factors, it's always so important to remember that the options market doesn't exist in a vacuum. The market maker's big plan has to deal with all the other forces out there. So let's quickly zoom out and look at a few other key things going on right now.
First off, there's the big liquidity picture. Analyst Arthur Hayes is making a really compelling case that even if it's not obvious, global liquidity is actually increasing. And historically, that's like rocket fuel for assets like Bitcoin. Second, let's talk about altcoins. Man, they are showing some extreme weakness right now. Apparently, many of the major market makers took huge losses back on October 10th, and they're still licking their wounds, leaving less cash to support the smaller coins. And this could be a drag for weeks. And finally, just a practical security warning, a new malware called Steelcase is making the rounds, and it's targeting crypto wallets. It's spreading through things like cracked software and game mods, so as always, please be incredibly careful with what you download.
So, all of this leaves us with the central tension for the week. We have a multi-billion-dollar incentive for market makers to push the price of Bitcoin up towards $96,000 by Friday. The stage is totally set. The only question now is, will they pull it off? Keep your eyes on the charts, because this week, it could be one to remember.